In this session, we'll understand reverse mortgage loan. If you take the case of normal housing loan, what will happen is the property purchase will happen in the beginning, and that purchased property will be mortgaged to the lender. So in the beginning stage, the stake of the borrower will be very low, but with the passage of time, with the EMI payment, regular EMI payment, what will happen to the loan? Loan will come down. So eventually the stake of borrower will increase. This is the case of normal housing loan. But if you take reverse mortgage loan, in the initial stages, borrower will have high stake in the property. The borrower is going to receive regular cash flows for the property from the lender, and over a period of time, as he receives the cash flow from the lender, the loan amount will increase and borrower's stake in property will come down. This is the main difference between the normal housing loan and reverse mortgage loan. But what is exactly reverse mortgage loan? Let's see. This actually came as a scheme, reverse mortgage loan scheme. This scheme was introduced in India in 2007 with effect from 1st April 2008. The scheme was actually developed by NHB, National Housing Bank. The focus was to help the senior citizens who are above 60 years of age. These senior citizens will be getting periodic payments from lender by mortgaging his or her house. But very important point is, they are going to get periodic payments by mortgaging their house, and they will continue to remain as owner, they continue to remain as occupant of the house. It means there is no repayment during their lifetime. So no principal, no interest have to be serviced by them during their lifetime. And these kind of loan schemes, that is reverse mortgage loan schemes, they are actually extended by scheduled bank and HFC, housing finance companies. Let's look at the eligibility criteria for availing loan under reverse mortgage loan scheme. First of all, the applicant should be an Indian citizen. He should be over 60 years of age. In case of married couple, they are actually eligible as joint borrowers. And here, this age criteria is also left to the discretion of the lender. That is, in case of a married couple, the age criteria is left to the discretion of the lender. The condition is at least one of them should be above 60 years of age, and the other one should not be below 55 years of age. Let's say husband, wife. If husband is greater than 60, then wife should not be below 55. And vice versa. Okay, so this is the criteria prescribed for married couple. They are actually eligible as joint borrowers. Okay, this is in terms of persons. Then comes the asset. They should be owner of residential property. That property can be a house or flat. But that property should be located in India. Outside India, properties are not considered. They should have clear title to the property. There should not be any encumbrances, and property should not be too old. It means property should have residual life of at least 20 years, and that property should be their permanent primary residence. So residential property, that is the focus. It means commercial properties are not eligible for funding under this scheme. Let us also look at the salient features of this RML, reverse mortgage loan. Already we have seen senior citizen above 60 years of age are eligible. They will be getting periodic payment from lender by mortgaging their property. They continue to remain as owner and occupant of the property. That's the best part of it. and they need not service during their lifetime. It means there will not be any monthly payment of interest, monthly payment of principal during their lifetime. And who is giving this kind of loan? Primary lending institutions, that is scheduled commercial banks, housing finance companies which are registered with NHB. And this loan amount actually depends on factors like what is the age of the borrower, what is the appraised value of house, what are the interest rates that are prevailing in the market. All these criteria, they actually play a very important role. And here, and I told you that by mortgaging the property, they can get a regular payment from the lender. So the maximum monthly payment has been capped at rupees 50,000, and this maximum amount, that is maximum lump sum payment, we say maximum lump sum payment. So there can also be a maximum monthly amount, there can also be a maximum lump sum payment. So what will be the lump sum that will be paid? It will be 50% of total eligible loan amount, but what they will release is 15 lakhs. So maximum is 50 in terms of percentage, but in terms of cash, the amount that gets disbursed is 15 lakhs. Okay, and these funds can be used for medical treatment, either for self or spouse or dependents, and balance loan amount is what eligible for periodic payments, and that too it will be capped at 50,000 per month. So first, total eligible loan amount have to be arrived. In that 50% is eligible for lump sum payment, but that 50% should be within 15 lakhs. If it is greater than 15 lakhs, then up to 15 lakhs will be given as a lump sum payment, and balance loan amount are eligible for periodic payments along with the remaining 50%. And how disbursement will happen? Disbursement can be either monthly way or quarterly or half-yearly or annual. So this becomes a regular, and it can also be a lump sum as we have discussed here, or it can also be a committed line of credit. So three options: option 1 monthly, quarterly, half-yearly, annual; option 2 lump sum; option 3 committed line of credit, or it can be a combination of all this. Okay, it can be a combination of all the three also. And what is the period for which this loan will be given? The maximum period of loan, it is 20 years. Okay, that is, this is the period for which the loan is actually given to the borrower. I mean, as a regular payment, And for what purposes it can be used? It can be for varied purposes. It can even also be for upgrading the residential property, renovating the residential property, medical exigencies and all. Right. And when the borrower goes for this arrangement, there is a transfer of capital asset in favor of a lender, that is under reverse mortgage scheme. But this transfer is not considered as a transfer in the beginning, but it is considered as transfer only at the point of alienation of mortgaged property for recovering the loan. This will happen after the life period of the borrowers. Okay, we'll discuss more about this in the following sessions.
On this topic, do check our comprehensive online course. I have given the link in the description below. If you like this video lecture, do not forget to click on that like, share and subscribe button with bell icon.